What if I told you that some of the most powerful processors on Earth can actually make your trading platform slower? Yes, slower. And a lot of traders are buying them thinking they're upgrading. If you bought a giant server-class processor for trading, you might have built a monster computer that is terrible at trading. Not terrible at computing, just terrible at the one thing you actually needed to do. And this is one of the biggest misunderstandings I see in trading hardware. People think more cores automatically means more speed. And that sounds logical, but trading software does not work that way. Modern trading platforms are not single-threaded dinosaurs from 1995. They do absolutely use multiple cores, but they also cannot spread everything across those cores efficiently. Some work can be split up and done in parallel, but other work has to happen in order, step by step, in real time. And that sequential work is where performance lives or dies. Think of it like a highway with 20 lanes that all merge into one toll booth. It doesn't matter how many lanes you had before the merge. Everything slows down at the bottleneck. Trading platforms have bottlenecks like that everywhere. Chart rendering happens in ordered processing steps. Indicators depend on previous values before they calculate the next one. Your interface has to respond instantly to what you click. Order events have to process an exact sequence. And data messages cannot show up out of order. All of that creates what engineers call sequential processing limits. Normal humans like us call it a bottleneck. And bottlenecks care about speed per core, not how many cores exist. And this is why adding more and more cores eventually stops helping. At some point, you're just adding more empty lanes before the same toll booth. It looks impressive, but it doesn't move the traffic faster. And this is exactly where traders get in trouble, because the most intimidating processors on the planet are built for something totally different. Processors like the AMD EPYC are designed to run huge data centers. The AMD Threadripper is built for heavy rendering and simulation workloads, and the Intel Xeon is engineered for enterprise servers running massive parallel jobs. Don't get me wrong, these chips are absolute beasts. They are incredible at chewing through giant workloads all at once. But trading is not a giant parallel workload. Trading is a responsiveness workload. It's about reacting instantly when something happens, and that is a completely different performance priority. Server processors spread power across tons of cores. That often means each individual core runs slower, and slower cores hurt sequential responsiveness. They also add more scheduling overhead. Your operating system now has to coordinate a small army of cores, and more coordination, believe it or not, means more latency. Some server chips also run lower clock speeds for stability, and that's great if you're running a data center 24 hours a day, but it's not great if you need instant reaction during market volatility. And this is why we do not recommend server processors for traders. Not EPYC, not Threadripper, not Xeon. They are incredible machines. They are just built for the wrong battlefield. Traders need speed of reaction, not scale of computation. Here's the simplest way to understand this. A server CPU is like hiring 100 workers to move boxes. Trading is like needing one Olympic sprinter to explode off the starting line. It's a different job, different design, different winner. What traders actually need is extremely fast single-core performance. They need high boost speeds that stay stable under load, and they need systems that do not choke when volatility spikes. And that's why our higher-end trading desktops and laptops are engineered for extreme single-thread performance. We choose processors built for maximum responsiveness, not maximum core count. They are designed specifically for real-time trading workloads. And get this, when responsiveness drops, you usually don't see a dramatic failure. You just feel tiny delays, little hesitations that are easy to ignore. Charts update slightly behind price movement. Order entry feels just a hair slower. Platform interaction feels less smooth when the markets get busy. Each delay feels small, but trading's repetition. And repetition multiplies small inefficiencies into real money. Professional traders understand this deeply. They obsess over latency and responsiveness. They don't obsess over bragging rights about core counts. So how do you know if your system's even built correctly? First and foremost, check your processor's benchmark performance. Second, watch your system during volatility. If charts hesitate or CPU usage spikes hard, that is a responsiveness warning sign. Your hardware is hitting its limit. And if you want a clear breakdown of what actually matters for trading, download my complete guide to trading computers. That link is in the description. It walks you through processor selection, memory, cooling, and performance targets step by step. And if your system is built around server-style architecture, upgrading the right way might make a dramatic difference. We build trading computers specifically optimized for real-time responsiveness, and you can also check those out below. There's a link in the description. The key takeaway here is simple. The most powerful processors in the world are not always the fastest for trading. Architecture beats core count every time. Build for responsiveness. My name is Eddie Z, and if you want to see the most responsive trading computer in the world, you want to check out this video next. And as I always say, may the trend be with you.